Well, how would you like to know exactly how fast this industry is going to grow over the next 5 years? Or how would you like to know what the customers really think about this target company's product or service and whether they think the prices are too high, too low, whether they're planning on spending more money with this target company or more money with their competitors? And how about those competitors? Are they doing things well? Are they messing things up? Are they lower cost than your target business? And I don't think many deal makers at that time, they were consumed with quality of earnings, which of course we still are, and deal room data and a lot of that. But this external view was kind of a new lens entirely. And people said, you can really tell us things like that? And we said, sure, that's kind of what we do for a living for the corporate world. This is just a deal application of that. And so we'll have to change it and evolve it and make sure it happens very, very fast because that's what your time need is. But these are all things we know how to do and we've been doing for years.
It sounds like a hybrid between the competency area of strategy and diligence. Because I talked to a lot of these firms, and I feel like a lot of boutique firms like take a very tactical approach at diligence. But what you described is a lot of bringing in a strategic view when you start looking beyond the scope of the deal at hand.
I think that's right. And I think when you think about the way things are changing today in the contextual landscape of just the world and the economies. I mean, think about how fast technology is changing, and I'm sure we'll talk about it later, but things like AI is a complete game changer. And at the beginning stages of all of this, things like automation and the internet became game changers. And so unless you understand how technology is going to impact different industries, and it's very transformative in many industries around the world, it's hard to make an investment at any price and know whether or not you're making a smart bet or not a smart bet. So that's just one example, but regulatory issues are another example. But there are all different kinds of things that are impacting how industries behave and how they change. And I would argue that the half-life of business stability is declining dramatically. Declining dramatically over time. It's going to continue to decline dramatically over time. And so paying more attention to the external world is important for those reasons. It's also important because the pricing in this industry has changed a lot over the last 30 years. When I started in the private equity world, if you looked at a buyout, the typical price would be something like 5 or 6 times EBITDA or cash flow. Now it's twice that, or sometimes more than twice that in different industries. So the margin for error in buying well has gone virtually to zero. So you're paying double what you paid 20 or 30 years ago, and therefore you've got to make sure that this asset really performs to generate those returns. You're also actually doing that in a much more competitive world than 25 or 30 years ago.